If you haven't already, please subscribe to our channel, and if you like the video at the end, click on the thumbs up.
Hello everyone, and welcome to Crypto Night, the crypto investor channel. I'm Boris, so let's dive in. Today I'm with Colton. How are you doing, Colton?
I'm doing great, Boris. How are you?
Good. First of all, sorry everyone for the video we posted. The last video we posted, it was very staticky, and apparently I had a problem with my microphone, and when realized it was a little too late. So the quality of the video, the content is actually great. Unfortunately, the quality of the sound is not too good. So I'll try to do another similar video to re-explain everything so it's not painful to watch. So sorry about that. All right, so let's share screens real quick. All right, so we're seeing the market is rebounding. Today we are close to 44. So we touched 44. I think we even touched maybe a little higher. We touch 45 to 89. So first of all, totally okay that it goes down now. It could even go down to maybe 42, 41, even 39, because some people, I mean, we have to realize over 30 days, we went pretty down. We were down to like, and this only shows 33, but really we went all the way down to about 32,000. So we've gained quite a bit, all the way to 45, 200 last night. It's going way up. I mean, if we look on a 2 weeks, it's pretty big. Went from 36 to 45. So there's always going to be some profit taking. It's never a slope that just goes up. So that's totally normal. Nothing to worry about. It's actually healthy, that it goes back a little bit. And then hopefully I'll keep on pushing higher. I mean, it has to go through a few things, a few resistance. If we want to break higher, if we want to go back to the 50s, and then once we break through the 50s, then hopefully we can break through the 60s, etc. So that's good. Overall, good news, to see that the markets are getting better. We're going to have to monitor a little bit what's going on with the stock market, what's going on with the inflation. Inflation numbers, I believe, come out tomorrow, Wednesday. So we'll have to monitor all this. But today we wanted to talk to you about one of the nodes, that's how they're called, where you can invest and you're getting rewards, and it's basically based on passive income, meaning you're investing money and then you get a passive income from it. There are several of those out there. Some of the big ones are well known, like Drip is one of them. I don't know if you're familiar with them, Colton.
No, I am not, sir. I am not.
Okay.
Yeah.
There's another one that the name escapes me right now, but anyway, all those are based on, so the one we want to talk to you about today is called THOR Financials. Now, of course, they're playing off of the Asgardians and all the mythology from the Northern Europe. And so basically what they are is they are a multi-chain yield farming protocol. What that means is that they're playing on several different yield farms. And imagine, like, if you bring money to them, it's like a bank. They invest for you, except banks keep the lion's share of the winnings, and then they just give you a tip for giving you money to invest. Mm-hmm. Here, they're going to redistribute pretty much everything. They're going to keep a little money, to make some money themselves and make sure they can keep operating. But the lion's share is going to go to the people investing. That's why you make a lot more with those because basically you eliminate middlemen, you eliminate high cost employees like you have in banks. You eliminate traders that have to have some gigantic bonus at the end of the year and huge salaries. So by eliminating all this and redistributing directly the winnings to the people who invested, you make a lot more. You know, if you go see a bank and the bank says, oh yeah, some of our top investments, you know, we can get you like 4 or 5% a year. You're like, wow, for a bank, that's huge, you know. And like a Madoff, you know, was offering 9-10%, and people say, what's a Ponzi scheme, you know? These guys, currently they offer over 800% a year. Now they're just about to lower this to 467% roughly a year, which is still awesome. But they started extremely high to attract people and try to get the ball rolling because of course at first they don't have any money, so they need to grow money-wise. So they make it extremely attractive. And at first, like I said, they were around 800, 900%, you know, 1,000%, whatever. And then, you know, they were even maybe at 12, 1,500%, and they lower it over time. So this will be lowered over time, but it's still 867%. Maybe next time they lower it a few months from now, maybe it gets lowered to 200% a year. And eventually, you know, they'll probably go all the way down to 80%, 50%, but even, and then we'll see where they stop. You know, maybe they stop around 50%, who knows? What they want to do is make sure they keep being sustainable. And to be sustainable, you cannot offer in a constant manner a super, super high yield. But you can have much better yield than a bank can offer, because once again, the bank, you know, wants to keep the majority of the money for themselves. Here, it's almost like you are part of the bank. You are the bank. So that's how you make a lot more money. But for right now, this project makes about 467% a year. And since the numbers are just changing just as of right now, so 467% is the new number. You're going to be making pretty decent money for the next 2-3 months. And then they might have to lower it again. That's roughly the last time they lowered was about 3 months ago, you know, and now they're lowering again. So, so that's something to keep in mind. But the return you get is pretty amazing. And I wouldn't put, I mean, I put a little money on this. I didn't put a ton of money. I mean, realistically, if I look at roughly how much this represents in the total portfolio, I must have put between 0.5% to 1% of my portfolio on those guys. So not a huge number.
Yeah, quick question, Boris, is to help me understand a little bit better. This is kind of like Strong Block, you know, that
exactly Strong was.
Okay.
Thank you, Colton. I was looking for Strong. It's exactly like Strong or Drip or any of those nodes. They're called nodes. They're not real nodes, but I think they all use the term nodes because then people understand it's easy. Oh, okay, it's like a computer, a node that calculates a bunch of stuff, whatever. It's just an easy way of selling those things. But yeah, Strong. It's exactly like Strong.
Okay, that makes yes, sir.
Yeah. So. They explain, you know, and you can do the research on it. Now, once again, you know, I think you know that by now. Every YouTuber says that, you know. I feel kind of stupid saying it, but, you know, this is not financial advice. We're just sharing our experience with you guys. And then you can just decide to do it or not to do it. It doesn't matter. You know, it's your money. You do whatever you want with it. And we're just showing you some of the things we're doing and the way we approach those things. So they have a pretty good website overall where they have all the numbers. Now here's the current reward rates, and maybe I'm not sure if I can zoom in on this a little bit to make it slightly bigger. There we go. So we currently have, those are the current rates. So they have 5 levels. You have the Amdal, Freya, Thor, and Odin. And basically they're saying like, okay, Odin being the biggest one. So it takes 78 Thor to create a node. And this will earn you 2.7 Thor per day. So if we look at the current number for Thor, by the way, whenever you search for them on CoinGecko or CoinMarketCap, be careful, there are multiple Thor. Everything, the one you're looking is for Thor, and then in parentheses Thor. That's Thor. Okay. That's the one. That's the name of the coin and the name of the symbol. But be careful, you have Thor swap, which is also a Thor, but it's it's totally different. So that's the one we're looking for. And right now it's sitting at around $100. We'll just to make our calculations easy today, we'll say roughly it's at $100. So basically it will cost you $7,800, to earn 2.7 Thor per day, which is basically $270 per day. So that's pretty good. When you invest $7,800 and it makes you $270 a day. Now this is over. Unfortunately, this was the rate up until today. As of tomorrow, the new rate is, like I said, lower to 1.02 Thor per day, which is still $100. So basically, it's going to cost you $7,800, to get $100 a day, which means that in 78 days, your investment is paid back. In exactly 78 days, so basically 2 months, if we roughly say 2 months and a few days, let's say, you will have your money back completely. After that, every day after that, it's $100 that are coming in, and that's it. It's making you $100 every day. Their goal, by the way, is to make sure that the investors, they get some kind of a passive income pretty much for life. So how long will it succeed? Who knows? But what's cool is you get back your money in, let's say, two months and a few days. So 2 months and a few days, risk is over. It's just gravy after that. And when you calculate, the investment you had to make and how much you make per year, that's where roughly, you'll see that you're making 467%, whatever. There'll be some variation. The number that I'm giving you is also based on today's price of Thor, which also changes quite a bit. If we look on the 90 days, it has varied. It went all the way up to like 400-500. It went as low. You could have bought it a month ago, a month and a half ago. Actually, a month ago for $15. Today's at 97, and then it went all the way up to about 226, and now it's back down to about $100. But the cool thing is it's gonna keep on paying you. And in about 2 months and a few days, you will be at zero risk because you would have received back all your money back. Now, the one thing you need to know is whenever you buy Odin, Thor, whatever, obviously the calculation, Odin is the best. Thor is much cheaper. It's only 12, so it's only $1,200. The Freya is only $600 and Heimdall is only $125. But as you can see, these are very low, the numbers. And if you do the calculation, this one, Odin, will take you 78 days to get your money back. Thor might take you, I have another calculation, but it's going to be more like 95, 100 days to get your money back. Freya might be, more like 5 months to get your money back, and Handle might be like, 8-9 months before you get your money back. So the cheaper you go, and of course everybody doesn't have the same amount of money, etc., etc. If you can, it's better to go as big as possible, because you'll get your money back quicker.
Definitely. Yes, sir.
The other thing is you can combine. I've actually got myself a few add-ons. I bought them because you can compound together. If they are within the same class, if you get one odd and one Thor, they don't compound together. If you get 2 add-ons, 3 add-ons, whatever, they'll compound their rewards together as if it was one single node. So it'll demultiply, itself, because obviously it helps, to multiply the numbers. So overall, it's an interesting project. I think these are kind of the risky projects, but what's cool is you get paid back so fast that even if there was a problem like a rug pull or it's a Ponzi or whatever, you have made your money back. You have made your money back very quickly. So the risk isn't that gigantic. Now, lots of people are talking about THOR Financial out there. There's Discord. The guys from THOR Financials, they've been verified.
And they call it Thor. They call it Thor Thursday on their Discord. So it's kind of a pun for Thursday, but that's where they really release all the information on their Discord channel.
Yeah. So lots of information out there. Like I said, don't take my word for it. Don't take our word for it. Go do some of your own research. It's just that it looks very interesting. And we know that there are lots of Ponzi's out there and lots of scams out there. So you need to be very, very careful with those type of investments. And once again, I would say it's always a good idea to do low numbers on those. Make sure they only represent like 1 or 2% of your portfolio, because of course, if they represent 1 or 2% of your portfolio, you know that if you lose that money, the Bitcoins, the Ethereum, all the altcoins you have will make up for it in no time, because it's 2%. But in some cases, it could be a nice income, because if you're able to say, let's say you can afford to do an add-on, and it's an investment of $7,800. In about 2.5 months from now, that investment is paid back. And from now on, granted that the fact of the Thor token stays around 100, which it could go up or whatever, and you can sell it at any time because you receive rewards, but you're not forced to sell them. You decide when you want to sell them. So if you see that, it's gone up to 200 or whatever, maybe it's a good time to sell some of my Thor. That's when you can do it. But can you imagine with one single Thor, once your investment is paid back, this is making you $3,300 a month. I mean, it's basically a salary, so isn't it worth the risk? And if you say, you know what, $7,800, I'm sorry, man, that's a lot of money. I don't have that kind of money. Maybe what I have is $1,200 Thor. So with Thor, they're going to pay you basically $14 a day. So for an investment of $1,200, it's going to take a little bit longer. It's going to take more like 3 months to reimburse that investment. Basically, it's going to take, about 90 days, roughly, if you do a rough calculation. So 3 months. But in 3 months, your investment of $1,200 will be paid back. And from now on, you're going to be making $14 roughly every day. So $14, roughly, you're looking at making an extra $500 a month. I mean, that could be a nice chunk and change, chunk of change. to help pay for bills, on a monthly basis, etc., etc. So overall, I'm not so sure I would entertain any of the two lower ones like Amdol and Freya, because those now we're really lowering, going very, very low. And at this point, you're making like 50 cents a day. 50 cents, 1 cent a day with this. I mean, what's the point? In my opinion, it's so low that at that point, just don't do it. But one Thor for $1,200, that makes you $14 every day. Every day of the week, every day of the month. There's no weekends, no nothing. It's always making you that money every day. And I can confirm I've been on this for a few weeks. They pay all the time. Actually, it's a counter that just keeps on going up, and I've actually already claimed. So I got some coins out. I got them. I haven't sold them yet, but they are in my MetaMask. So they're there, and I wait for a slightly higher price before I sell a few of them. And that's it. Now, the one thing you need to understand is that $1,200 or that $7,800, that money is gone. You will not get it back. Meaning that once you have a node, that node is in place, it makes money, but you can never sell the node or unstake the node or remove the coins from the node. It is not something that exists currently. They say they will do it in the near future. They say either we're going to allow people to sell their node to other people, or we're going to allow people to undo their nodes. But as of right now, it is not a mechanism that's in place. The other thing that you need to know, as usual, whenever you claim your coins, you have a small tax fee that you have to pay. Nothing to do with the real taxes, but they call it a tax, whatever. This already has kind of the numbers built in, with the tax. The tax is 10%. So every time you remove coins, if you have 100 coins, they will really give you 90 coins. But in this number, the tax already calculated.
Quick question, Boris, can you buy Thor on any exchange, or is it a specific exchange?
So it's a swap. Once again, you have to swap it, and it's sitting on Avalanche. So another Avalanche project, which is great because not Ethereum, being Avalanche, the fees of staking, unstaking, selling, etc., everything, it's super, super cheap. We're talking a few cents, to do any kind of staking, unstaking, claiming, whatever. All the operations are very inexpensive, but it's a swap. So whenever you're ready, you go to Trader Joe. If you guys are not familiar, I'll just show you Trader Joe. That's the big DEX, decentralized exchange, from Avalanche. Now, of course, Trader Joe is a store in the US, so
I was going to say that's what I know.
Crypto, yeah.
I was like, wait, you're going to a food store?
Yeah, no, it has nothing to do with that, Trader Joe. Trader Joe's crypto. Where is it? DEX. That's it. Trader Joe XYZ.com. That's the address of Trader Joe. You'll recognize it. Their little, boom, their little logo. It's kind of funny. Yeah. And so basically here you see Connect Wallet. Maybe I'll lower this. You have the Connect Wallet. You can collect MetaMask, Coin98, blah, 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 blah. So basically you connect your wallet and then you say, oh yeah, I want to buy some Thor. So they're going to say like, oh yeah, Thor AVAX. That's what you do. So basically here you are, once you have connected your wallet, you can exchange your AVAX for Thor. Okay?
Yes, sir.
And if you had Thor and you wanted to get back AVAX to eventually sell the AVAX to make money, the same, you would reverse and you'd say, okay, Thor to AVAX, and you would do that exchange. So it's pretty easy to swap. It's just an exchange, and it has the current rates and everything. Once you have your Thor tokens ready, you go to THOR Financial, you launch the app. And when you launch the app, it will, it'll try to do a connection with your MetaMask. And basically it will, arrow connecting wallet. I just canceled it.
Yeah.
But it will show you if you have multiple nodes, how many nodes you have. It'll show you nodes and how much reward you've made. Basically, when you go up here, rewards in green, you have the numbers and it goes up all the time.
Okay.
And that's it. So it's
Yes, sir.
pretty easy. If you have, let's say it's 78 nodes to make an Odin. So you will say, let me name my node, maybe call it Odin 1, whatever. It's just for yourself. It doesn't matter. Then you approve the contract and then you create the node. So, and that's it. And it takes from your wallet, depending on, it'll show you the number of Thor you have up there. And basically it'll deduct the number. Once the node is created, it cannot be undone. It's,
There.
and that's it. And then it starts earning rewards, and the rewards you can claim at any time. So it's compounding every day. It's working. But if you want to retrieve money on a daily basis, you can. On a weekly, monthly, it does not matter. You choose whenever you want to claim those rewards.
Okay.
And you see here they are telling you, these are the new percentages that you're gonna get. But we're talking 1.3% per day. So it's still huge, still gigantic, even with the lowering. And the lowering will go even lower, like I said. But still much better than anything you can get on the market. It's a passive income, and it's a passive income that's very easy because it takes literally no time to set up, and it starts earning money right away.
Makes sense.
Any questions, Colton? Anything you want to understand better on this, or is it pretty clear or what?
Pretty clear, but from my side, I did some research before this, and it seemed to be there was 4 different types of nodes, and I forgot, what they were called. What does this node fall under here, Boris, for the people watching?
The node on this particular project, or?
Yeah, on this particular project. Yes, sir.
So you have those 4, Heimdall, Freya, Thor, and Odin. I would really only look at the 2 top ones, Thor and Odin.
Uh-huh.
And like I said, Odin makes you 1.3% a day, but of course it's a $7,800 investment. Thor is 1.15% per day, but it is much lower. It's only $1,200 investment per day. So you see, those are the new numbers.
And what's the biggest difference, I guess, between Strong Block and Thor? Why would you put your money here versus?
I think they're just different projects, but overall they try to achieve the same thing. What they're trying to do is get a treasury of people coming in, investing money. So having, let's say, thousands and thousands of people, if not more, hundreds of thousands of people coming in and putting, $1,000, $10,000, whatever, into the treasury. Then those guys take that money and they go invest in a lot of different yields that makes very good return. And the money that they make, they distribute back to all the investors.
Yeah.
Because think of it like if you were a shareholder of the banks and you coming in with $1,200, $7,800, and you're like, I'm buying, a part of that bank. And from now on, I'm going to get part also of the winnings with the bank because I am the bank. So I'm getting what, the big banks are getting whenever their trader does very well, and makes a killing. They give, like I say, just a tip, or they literally give pennies on the dollars to the clients, and they keep the lion's share for themselves. But now that you're part of the bank, you're keeping the lion's share. So that's why those projects can potentially make a lot more money than anything else you would ever see from any financial institutions. Because financial institutions, and that's why, the whole crypto universe was created. The mindset of banks and investment banking is to say, hey, give me your money. I'm going to go play at the casino. If I lose, it was your money anyway. And if I win, I'll give you a little, tiny part of the winnings. I'll keep I'll keep 99.8% of the winnings. I'll give you your money back, and I'll give you some ridiculous percentage on the winnings, but I'll keep pretty much everything. So of course, that's why you see banks how they're begging you, like, oh, please open a savings account. Oh, please, let us manage your money for you. Because of course they're like, man, this is awesome. These idiots are giving us their money to go play at the casino. And every time we lose, it's their loss. And every time we win, we win, so they can't lose, that's the reason why you don't see banks ever losing money. And the beauty of it, they went too far in 2009, which is the reason why Bitcoin was created in the first place. And in 2009, they went and played so badly that they not only lost the money from the people, but then they also told the politicians, hey, we're actually bankrupt. You better bail us out. Otherwise, you're going to see the whole economy collapse. So, they actually ran out of money that supposedly they didn't have, and the government just rushed and could give them money. It's just beautiful. I mean, what a great concept. So, but those projects, that's what they are. They are basically kind of a bank, except that, we're playing with our own money that we put together. So, like I said, it's always risky, and all those things, don't mortgage your house, don't sell your car to put money in those projects. Just if you can afford it, if you have a little extra money and you're like, you know what, I'm willing to take a risk. Plus, it also depends on your age. Something very important in investment. I know, Colton, you're a younger guy. You can take a lot of risks because if something wrong happens, you have decades to make that money back. Let's say you go with a Thor, it's $1,200. You have decades to make that money back. No big deal. If you're 58, if you're 65, it's a very different story. You're going to need the money for your retirement. You can't afford to take that kind of risk. It's too risky, So it really depends where you are at and what age you're at and all those things. So whenever people watch those videos, remember that it depends on you. Everyone is different. There is never a recommendation that fits all.
It's a case-by-case scenario. Yeah.
It's a case-by-case scenario. It's also depending on, how much risk you can actually take, but also what's your financial situation, what's your age. So all those things come into play.
Just curious here, Boris. Are you locked in or grandfathered into the current reward rates, or is that going to change on you tomorrow?
That's going to change on me. So right now I was making the 2.73, which is great because basically at that time it was only taking a month. So I'm a little short. I needed a few more days. So I haven't made all my money back just yet, but I made, already a decent portion of it. So now it's going to take, almost 3 times as long because 273 down to 102. But yeah, you're not grandfathered. Then they have to lower for everybody because like they said, and that's totally understandable. It would not be financially sustainable.
Yeah.
Those rewards are gigantic, and like I said, they have to lower it, but it's still, you can't compare savings account at Chase for 0.2%. No, I'm sorry, 0.02% a year with 467. I mean, basically, it will take you not centuries, but millennials exactly to go make that kind of money that you're gonna make in 2 months with the guys at THOR Financial. Now, of course, the bank will say like, oh, well, with us the money is safe. Yeah, until until they have a 2009 episode and they almost disappeared. So nothing is ever safe. Remember that.
And my last question, Boris, and people were talking about it during the research that I did. How was the KYC process? Was it easy? Is there a KYC process?
There's no KYC project. I mean, KYC process because in this particular thing, it attaches to your MetaMask. MetaMask, it's a little bit like a wallet. It's exactly what the wallet you have in your pocket. Mm-hmm. So it is secured. You need to make sure you put, all the securities in place, especially with seed phrases, and make sure that you have a very, very strong password, etc., etc. But it's like the wallet you have in your pocket. So imagine you have $100 in your wallet right now. Mm-hmm. If you go invest it, you pull out that money for $100 and you put it into whatever investment. Mm-hmm. They're never going to ask you for a KYC because it is cash money to begin with, so to speak. Yes, sir. So these projects don't really do KYC on the investors.
Okay.
So remember that. Yeah, that is not something that is in place currently because they don't do an exchange. Since you have to go through an exchange, I mean, obviously you're going to swap it back for AVAX.
Yeah.
Thor to AVAX. Those AVAX, you're going to probably say, hey, I need some cash. So I need US dollars, I need euros, I need British pounds. So you're going to send those AVAX to your exchange like Coinbase or Binance or KuCoin. And you're going to exchange those, for dollars and then send those dollars back to your bank account. So the thing is, you've done the KYC with Binance or with Coinbase. So they're already going to get you right there, if anything else. Yeah. So there's no need for them really to do a KYC because they know that at the end you have to go back through AVAX and then you have to exchange those AVAX on your exchanges. And so that's why KYC is not needed in those cases, which is great because it makes the process even easier to invest in those projects.
Definitely, yeah. But from my side, Boris, those were the questions that I have today. I appreciate all the information, and I'm like you said, I can take the risk, so I'm definitely going to take the risk.
Okay, yeah. I mean, look at it, and definitely, it's always that's what I do as well. I go read the documentation. I go watch, a few different videos on YouTube because there are lots of videos on YouTube. Some of them will say, "Oh yeah, it's kind of a scam." Others will be, "No, it's great." You have to make your own opinion. Now on Thor, I didn't see too many things that were negative. Most of them were pretty positive. And that's what you want to see. There's never any guarantee anyway.
The biggest thing that I saw, doing research for this is that there was a couple projects that were similar to this that, that got hacked in the end towards 2021, but, they weren't serious projects. It kind of seemed like Ponzi schemes when I did the research. But, looking at these seem to have some serious, backup power and people supporting it. So, I don't think it's like the other ones where those people compare on YouTube to the pitfall and at the end of 2021, to be honest with you, Boris.
Yeah, no, definitely. And but be aware that those are always kind of risky investments. But that's the only way to make money. If you don't want risk, a few years back, if you didn't want any risk, once again, you would turn to your savings account and it would make you almost nothing, but there was no risk.
Yep. And
if you wanted to make more money, you had to put your money on the stock market. But of course, they'll be like, wow, there could be a crash, the stock you're buying, it could go down, so risk, but better rewards. Definitely. However, the rewards were good, but sometimes they're not that great. And the other thing is, in today's huge inflation that we have, the problem is if you say, I'm going to go with the savings account because it's pretty safe, well, actually, it's a guaranteed way of losing about 8-9% a year. You know, with a huge inflation and the fact that they pay you virtually nothing, basically you just guaranteed to lose 8% a year. So is it really that good? You know, so that's why having some of those things. But once again, another great way to make sure you don't take too much risk is to diversify. Meaning that there are other projects out there like Thor. Another one that we'll probably do a video on soon is called Drip. And it looks pretty promising as well. But if you were thinking like, okay, I'm going to invest $5,000 in project like Thor, probably it's better to put, $1,200 on Thor, and then another $1,200 maybe on a Drip, and then $1,200 on another one, and then $1,200 on another one. And at the end, you have 4 projects running at $4,800 grand total, but you own 4 projects. So if one of them turns out to be a Ponzi, or turns out that something went wrong with the project, at least you still have 3 other projects making you money, and you can afford, over time, what's going to be very important is after 1 year, where am I at? If you're making money, then that's great. That means even if 1 or 2 of the projects have disappeared, but that's another way also to minimize the risks.
Yep.
Is to invest on those type of projects, to say whatever amount of money I was thinking about putting in, I am only going to do, maybe 1/4, 1/5 on that particular project. And then I'll look for another one of the same kind that I'll put another 1/5 of the money on.
Yeah.
Because if you are on several projects, definitely that's a great way to lower your risk.
Yeah. Yeah. This is like the old saying, don't put all your eggs in one basket. Yep. Yes, sir.
Exactly. All right. Well, thank you, Colton.
Thank you, Boris. I appreciate all the info.
Sure. Thank you, everyone. We hope this video helps, and we'll look forward to see you on the next video of Kryptonite. Thank you. Bye-bye. I hope this video helps. Thank you for watching. Have a good day.
If you haven't already, please subscribe to our channel. And if you like the video at the end, click on the thumbs up.